Good morning, everyone. Today, August 31st, 2025, we observe a broadly neutral stance across the US stock market as investors digest a mixed bag of economic data. While robust GDP growth and strong non-farm payrolls signal underlying economic strength, persistent inflation, as indicated by rising CPI and PPI, continues to keep the Federal Reserve in a cautious holding pattern. Major indices are showing consolidation after recent movements, with a slight tilt towards caution given the lingering inflationary pressures. Today's session will likely see participants focusing on any further commentary regarding the Fed's path and corporate earnings outlooks. We anticipate the S&P 500 to trade within its recent range, with key support around 5,200 and resistance at 5,300. Turning to today's economic landscape, the data presents a complex picture. We saw CPI increase to 323.05 from 322.56, alongside a significant jump in PPI to 3.3% from 2.4%, underscoring persistent inflationary pressures. The core PCE price index MOM held steady at 0.3%. On the growth front, the US economy roared back with GDP growth rate QoQ final at 3.3%, a strong rebound from the previous negative 0.5%. The labor market exhibited robust growth with non-farm payrolls at 73,000, though the unemployment rate edged up slightly to 4.2%. However, the ISM manufacturing PMI continued to contract at 48, and ISM services PMI slowed to 50.1, suggesting some deceleration in economic activity. The Federal Reserve maintained its interest rate at 4.5%, signaling a wait-and-see approach, despite the strong GDP and jobs report. This mix of data suggests the Fed remains vigilant on inflation, despite strong economic growth. For the market, this implies continued scrutiny of price stability indicators, potentially leading to a cautious market bias. The S&P 500 chart reveals a period of consolidation following recent gains. Price action appears to be largely range-bound, indicating indecision among market participants as they weigh the latest economic reports. We observed decent volume during this period, but without a clear directional bias, suggesting a balanced fight between buyers and sellers. The index is finding support around its intermediate moving averages, while facing resistance near recent highs. The overall momentum appears moderate, lacking the strong conviction seen earlier in the month. Investors are likely waiting for fresh catalysts or clearer macroeconomic signals before committing to a significant directional move. The market is digesting the strong GDP and job numbers against persistent inflation. Looking at the Dow Jones Industrial Average, we see similar sideways trading activity. The index has shown limited upside potential in the current environment, hinting that industrial and value stocks might be experiencing some rotational weakness compared to other sectors. Key support levels appear to be holding, preventing a significant downturn, but overhead resistance is also proving challenging to breach. Volume has been somewhat subdued, contributing to the lower volatility observed. This pattern suggests a cautious optimism, where investors are hesitant to push the index much higher, perhaps due to concerns about manufacturing PMI contraction and the broader implications of sustained high interest rates for traditional industries. The index continues to reflect a careful risk assessment. The Nasdaq Composite, however, continues to demonstrate relative strength, maintaining a bullish trend, albeit with some recent consolidation. Technology and growth stocks remain a key focus for investors, buoyed by the strong GDP report, though concerns about slowing services PMI could temper enthusiasm. The index is showing strong momentum on a longer time frame, with firm support levels preventing any sharp pullbacks. Resistance levels are being tested, and a breakout could signal further upside potential. Volume has been consistent, supporting the underlying trend. Despite the broader market's neutral stance, The Nasdaq continues to showcase the resilience and appeal of its constituents, particularly those benefiting from ongoing innovation and digital transformation trends. The VIX, often referred to as the market's fear gauge, is currently reflecting a relatively low volatility regime. This suggests a complacent market, where investors are not anticipating significant near-term price swings. A low VIX indicates a healthy risk appetite and reduced demand for hedging against potential downturns. While there are ongoing concerns about inflation, the strong GDP growth and robust labor market appear to be underpinning a sense of economic stability, preventing any major spikes in market uncertainty. The VIX current level implies that despite the mixed economic signals, market participants are largely comfortable with the current risk landscape. This could shift if inflation data continues to surprise to the upside, or if there are unexpected policy moves from the Fed.
Focusing on Life360 Inc. LIF, the 4-hour chart shows a significant uptrend over the past month, with the price currently consolidating around the 90.45 level. The stock has been trading near the upper Bollinger Band, which is currently at 93.43, suggesting it has been quite strong. However, we see some signs of short-term exhaustion. The Relative Strength Index, or RSI, is at 64.29, indicating strong momentum but approaching overbought territory, suggesting it might need to cool off. The MACD has recently shown a bearish crossover, with the MACD line crossing below the signal line and the histogram turning negative at negative 0.22, hinting at a potential short-term pullback. Similarly, the stochastic oscillator, with K at 80.20 and D at 75.24, is in the overbought zone and starting to turn downwards, confirming the potential for a minor correction. Key support can be found at the middle Bollinger Band around 88.65, with major resistance at the recent high around 90.76. Given these technical indicators, we maintain a cautiously bullish bias for LIF, with a potential short-term pullback before resuming its uptrend. Invalidation of this bias would occur if the stock breaks significantly below 88.65. Turning to the news for Life360 Inc., a recent article from Zacks titled, "Is Life360 Inc. at LIF? Outperforming other industrial products stocks." This year highlights the company's strong performance relative to its sector peers. This positive coverage underscores Life360's robust growth metrics and solid market positioning within the industrial products sector, suggesting favorable fundamental drivers. The market's reaction to such news is typically positive, as it reinforces investor confidence in the company's trajectory and potential for sustained growth, even amidst broader economic uncertainties. For Life360, this outperformance could be attributed to specific product innovations, market expansion, or effective business strategies. Looking ahead, investors will be keen to watch for upcoming earnings reports, new product announcements, or any strategic partnerships that could further bolster its competitive advantage. The near-term outlook for Life360 Inc. remains positive, supported by its demonstrated outperformance and underlying business strength. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.